Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
So now, what goes into making secondary markets for financial instruments much more efficient, also more transparent, and even just more secure? Well, to help us answer just that, please welcome Philip Peters of Zagazoo as he leads a discussion with Jim Needham of Merge Exchange, Graham Rodford of Architect, and Ziv Kian of Symmetria.
Oh, brilliant. Hello there, in digital world, digital land. Are you hearing me?
Hey, hello. Hey, you are.
Brilliant. My name is Philip Peters, and I am the founder and CEO of CitiQuants Corporation. I have the distinguished privilege and honor to have an august set of leaders and CEOs who are running platforms and exchanges. I was originally carded to present work that we are doing at our firm, but I think this opportunity was better, so we'd have to postpone other things we are doing. But just to say briefly, I'll just give a very short introduction as to who I am, and then I'll have the guys introduce themselves. We're based in Miami, and we are a digital platform company that takes cities' data and convert them into financial applications. And we do have a blockchain project called the PEV protocol that is will be taking all of this data from a city, creating a valuation of the city, and then converting it into tokens. And voila, we have the trading of cities as equities to have a comparative competition for municipal labor markets. That's my spiel in terms of what we are doing with the PEV protocol. But what we have with us today are 4 executives who have already launched platforms. One in Luxembourg, that's Luke, Graham, based in London, and Jim, I guess in Seychelles and London. And then, of course, we have Ziv, who is based in the Holy Land, and I guess Silicon Valley also, yes?
No, Tel Aviv.
So welcome, you gentlemen, and we welcome the audience, those I guess all over the world, 15 to 20 plus thousand people have tuned in to hear what we have to say on the topic of security tokens and secondary markets. So can we start with Jim? If you can just spend a little time and just discuss what you're about, your background, and then we'll go on to Luke, Graham, and then Ziv.
Sure.
Okay.
Hi, Phil. Thanks for the intro, and it's great to be here. It's been a fantastic summit so far, but my name is Jim Needham. I'm the head of strategy at Merge Exchange. We're a stock exchange operator based out of the Seychelles that is supporting traditional securities and digital securities. And I suppose our mantra is that we're trying to combine the best of the traditional world and the sort of forward-thinking digital world into one venue.
Jim, you came originally from the legal background and you quickly went on to capital markets, it looks like, from what I see from your background.
Oh, you've been doing your research. Yes, exactly. Yeah. So I got a sort of traditional banking capital markets background, like you say. And I guess started to transition into this world in about 2016. I ended up doing I did a course on blockchain that Oxford University were running, and that sent me down the rabbit hole, as they say.
Nicely. And Luke, I've been fighting to try to pronounce Luke's last name for the entire day, but allow him to do it for us.
It's pretty simple, actually. It's Luc Falampin. I'm French, as you can notice, but you can pronounce it as you want. So thank you very much for having me today. It's a pleasure. It's a great summit, actually. Very impressive for an online event. We had a lot of online events this year, but this one is quite impressive. So quick word about Tokeny. So since 2017, we help financial institutions to represent their asset on the blockchain. So we provide the technology to basically issue, manage, transfer, and even distribute securities on the blockchain. So we are our headquarters is in Luxembourg, but we have clients all around the world. As a technology provider, we are agnostic in terms of asset and region. So more and more it's growing, and we are backed by the Euronext Group, which is the pan-European stock exchange group with 6 or 7 stock exchanges in Europe.
And look, I see your background is both undergraduate and graduate in marketing, and I guess you moved straight into technology.
Yeah, exactly. I have a Bachelor of Business Administration in Finance and Marketing, and then I got an MBA in e-business more than 10 years ago. So e-business was very different 10 years ago. And then I started the first company, sold it in 2017, and started Tokeny. Beautiful.
And Graham?
Hi, Philip. Yeah, thanks for having me. Yeah, thanks, Draper Gorenholm as well. I think the other guys have said it, but it's been a great event. Yeah, I'm Graham Rodford, so CEO and co-founder of Archax. So we are the UK's first regulated digital asset exchange, custodian and broker, and the UK's first crypto asset registered provider as well. We started a few years ago to try and be a credible bridge for institutions to enter the crypto asset world and try and improve accessibility to capital markets for SMEs, companies and investors as well.
Well, Graham, unique about you, I see you have the capacity or the history of moving between the regulated space and the capital market space.
Yeah, I think fundamentally I'm a numbers guy. So if there's numbers involved, then I'm probably interested.
Lovely. And now our wonderful friend Ziv, are you in Tel Aviv right now?
I am.
Beautiful. So give us the lovely spiel. Give us a blessing while you share with us.
Bless you.
Thank you. Shalom.
Thank you. So my name is Ziv Killen. I'm the CEO of Symetria. Symetria is launching a digital securities market out of Israel, focused on secondary transactions and connecting the blooming and booming tech coming out of Israel to the world.
Beautiful. Well, gentlemen, we are tasked with the question of security tokens and secondary markets. So I thought, for the audience sake, I mean, there might be a whole range of people with different acuity and different participation in the space. So I thought to really lend meat to this 30 minutes we have is to really clearly define the two spaces. The private markets, the security space, and then we'll secondly go on to discuss the actual security itself, and then with the last part we'd deal with the actual performance and engagement of your businesses and how these blockchain-driven markets are really bringing value to this new landscape. So in terms of maybe we'll have both in this first question, have Ziv and Jim begin the discussion around, can you clarify for the audience the whole issue of the fundamental issue of the need for secondary markets? Why are there secondary markets versus primary markets or established regulatory markets? And the question as to why do we need it? Why is it important? And thirdly, what is it really trying to solve in the marketplace? So Ziv, you and Jim can begin, and then Luke and Graham can pitch in if they have something to add to it.
I'd like to let Jim begin.
Okay.
Okay. Well, I mean, so if we're talking about sort of mainstream traditional securities markets, the primary market is where capital is raised, and the secondary market is where assets, securities are traded sort of freely between participants at the stage where there's capital not being raised effectively. There are different rules around the primary markets and secondary markets, and generally they vary a little bit between marketplaces, but the principles are very similar. I think why they're important in this context is because historically, since the sort of genesis of digital securities and the STO markets, they've been thought of as a way of raising capital. You know, it was a sort of an evolution from, well, I think that was sort of, I guess, seen as the first use case of them. But as time has evolved, I mean, certainly the way we look at it is this technology has the potential to streamline a lot of the things that are done in the traditional, call them the public markets, we call them the listed markets. The way we approach this technology and the real benefits we see to it in the secondary markets is in linking up different market players. So linking between custodians, depositories, transfer agents, registrars, and even now, you know, people have the ability to be self-sovereign investors and to self-custody these securities themselves. So what I suppose what we're talking about as an exchange venue, and that, you know, whether that's an ATS, an MTF, or an exchange like ourselves, you're talking about a venue where you can bring together buyers and sellers in a sort of electronic fashion, and that's the purpose of the secondary markets.
Yeah. So first, I want to say something about Merge. Merge is kind of an inspiration, I think, as an exchange, because it went out from a place where there's no a lot of you know, it's not a big you know, financial hub, but it is becoming and going to be a meaningful exchange by connecting itself and offering services throughout the world. And this is our inspiration as well. And I think this is the inspiration of every digital securities out there. What we've seen, the evolution of securities exchange, was that once we had a state exchange. For example, in Israel, you have one exchange. This is the state exchange. It has, you even see like the legislation, it's all about the state exchange. And then in other places in the world, you could see there's the additional exchanges that are forming, and those have very specific specialities. And now, if we look at another segment of exchange, this is the crypto market exchange. There were some are even not regular, some are completely decentralized. But what's interesting about those exchanges is that they operate 24/7. They offer service 24/7, and they are truly global. So if you're from Japan or from Israel or from the Caribbean, you can plug into the same exchange and trade. And this is the vision of this new generation of exchange, whether they emerge out of Tel Aviv or the Seychelles or somewhere else, to be global, to play in the global space and to offer services to global investors and to do it around the clock. And I think, Jim, you're almost 24/7 now, right?
Yeah,
okay,
we're 25.
Brilliant.
Yeah.
So that's the story of secondary markets. It's a significant and important role that they play, given the size of private markets. Yes. Right. So in terms of, we've answered that fundamental question of what are secondary markets. Now to the other question of security tokens itself. This is where Graham and Luke would contribute in terms of what are they? How do they come in terms of their shapes and sizes, and the importance of getting these instruments listed on exchanges? How are they different to, let's say, ATSs and any other kinds of exchange? So why is security tokens so important for getting them off track and really getting them to succeed and have some great story in this digital and decentralized space? So can you guys chat a bit about the security tokens and what it offers for the future and present?
Yeah, Luke, after you.
Yeah, and no problem. So security tokens are basically the representation of securities on the blockchain, on the decentralized infrastructure. So there are securities. So the token can be the security itself, or the token can be a mirror of the real security. So it depends. This token can represent any type of asset, any value. And that's why it's very game changing, I think, because you can represent anything with a token, and then this token will be able to travel, to be transferred on the blockchain in a very efficient manner. So I think you have two main advantages of tokenizing securities. You have everything around automation, cost reduction, automation, digital efficiency, and everything around liquidity. So the main purpose of blockchain is to transfer value. Mm-hmm. So if suddenly you can digitize securities and you can embed compliance rules in these tokens, the securities, and you give the different stakeholders the ability to handle this tokenized securities as digital securities, it becomes very efficient. You mm-hmm. can control everything digitally, and not only sharing information with investors, it enables the direct ownership, even the direct custody, and everything can be done digitally. So I think the industry is at the stage where you can manage tokenized securities very efficiently. There are a lot of different protocols and solutions like Tokeny and others to do that. And what was missing so far is the secondary market, because you have a lot of regulation for the secondary market. And I think Graham knows that very well, especially in Europe, because basically if you organize the trade, if you put two investors in relation in a digital platform, you need an MTF license. So it's very tricky to launch the secondary market. In the US, you have the ATS, which are kind of hybrid, but in Europe, it's black or white. It's basically for private markets, you have no infrastructure for the secondary market, and for listed securities, you need the CSD, custodian, etc. So it's very heavy. But maybe Graham can explain that better than me.
Yeah. Thanks, Luke. Yeah, I think a lot of the points that Luke touched on there point to the fact that digital securities are securities, so they're regulated in more or less exactly the same way. And as a result of that, you have to fit in with all current regulations and current market ecosystem service providers as well. So trying to embrace the new technology whilst connecting into existing providers and the regulations a bit of a challenge. And I think a lot of people think security tokens are kind of a new type of investment and when are they coming, but we think of it in a bit of a different way. We just think of it as a type of technology. So it's not really a question of when the security tokens will come. It's more when will this technology be more widely adopted. And everyone on this call, actually, I've known now for a good couple of years, and we've all seen the development in the space, and we're really at a point now where the technology is being more widely adopted. We've seen it in this summit, some demonstrations of what's being done with the technology. We're trying to solve some of those challenges of the secondary market that Luke mentioned, and hopefully in the next few months we'll be live too.
Right. So all together now, I mean, it's amazing how time is flying. It's 5:08. We don't have much time. So we have discussed the actual marketplace, the actual instrument, and now in terms of the desire to see this market grow, we know that STOs are relatively new. There were some first attempts at its expression with some success, but it's relatively new. Would you agree in terms of the adoption of it? We might be looking forward to a very exciting future. So how in terms of the actual exchanges, melding secondary exchanges together with STOs and security tokens, what would you say is in terms of the adoption. Many people talk about the challenge of liquidity, and in one of the earlier panels, they say at the end of the day, you must have a product, and if the product is desirable, you will have buyers. And so the discussion is that having a good product generates the marketplace. So what are your thoughts on where this has to go in terms of the adoption of security tokens in the market, in secondary markets? How do you generate liquidity for that place to be vibrant and meaningful? Can you all just chip in and give your feedback on that? It's a very important question. You can talk about any regulatory concerns that might be constraining it.
Yeah, I'll have a go, guys. I mean, I'll reiterate what Graham and Luke said, which is that first and foremost, what we're dealing in here is securities, and really what's changed is the method of recording ownership. And so there'll come a time, and someone said it on a panel earlier, where we won't talk about digital securities or security tokens. It'll just be tokens, because this technology makes so much sense for the securities markets at large. When it comes to liquidity, and it's the same with any asset and any security on any market, there's a whole bunch of things that drive that. And it's a question everybody asks when they come to us. They ask, what is the liquidity like? And actually, you know, most of what we're catering for here is early stage, smaller companies, venture-backed businesses, alternative assets. They're not necessarily businesses that are they're not necessarily securities that are going to be highly liquid. And in a lot of cases, they're going to be assets that will be things that people will buy to hold for a long time, like a piece of real estate, right? They're not things that you would expect to see a high amount of turnover in. So we always try and sort of educate our issuers a little bit on some of the things that go into creating liquidity, and it's the availability of information is very important. It's the quality of the asset. It's the things like the shareholder spread, and all of these things combine. Investor relations, marketing. These are the things that drive liquidity. But actually, what issuers mean when they say liquidity, they often have different sort of things in their head. Do they mean they want loads of turnover, or do they mean they want to be able to sell a certain amount into the market on a certain day without moving the price too much? In which case, really, what you're looking for is a decent depth to the order book rather than actually lots of turnover. But these aren't things that are unique to the security token world or the digital security world. That's the same on any marketplace in the world. And I think the difference at the moment is there isn't the volume of people participating in digital securities in the same way they're participating in the public markets. And that's just something that is going to evolve over time. This technology and the access points to it are going to grow, and it's going to become normalized. And at some point, people will be trading digital securities without knowing that that's the technology that underlies what they're dealing in.
Okay.
I know that the name Onera was mentioned more than once this conference, but when it comes to liquidity, the idea behind Onera has to be mentioned that an exchange is not a separate entity acting by itself looking for liquidity from investors and assets, but it is part of a network of other exchanges, financial institutions. So Symmetria is connected to Archax, is connected to merges, and in all of those regulated entities can share liquidity between themselves and can share assets between themselves. If you look at the blockchain technology and what it's about, this is exactly what it is about having a distributed network where value is shared between entities. And I think that the idea behind Onera is really a great idea, and they're on the right way for execution of this concept. And then Symmetria, a company like ours, can enjoy liquidity from overseas and financial institutions overseas and so on. Merge can do the same and get access to our assets. In Graham and Luke, we can all collaborate and move liquidity from one place to another.
Luke, Graham, you guys want to add to the notion of
Well, I think the guys have covered it, and I think what we say is it's not all about deep liquidity; it's about facilitating liquidity. And in some cases, like Onera or bulletin boards, it's just having an option. I think Greg earlier from SharesPost mentioned that funds, for an example, private equity funds being super illiquid. I think some people would just crave any exit and some liquidity at some times, whereas you get other companies where maybe deep liquidity on a central limit order book is more appropriate. So I think it's not just about creating deep liquidity anywhere, but just facilitating it where it doesn't exist currently.
And Logio?
Yeah, I agree with that, because what we try to do with our clients in private markets, it's not crazy high frequency trading liquidity. It's just to reduce the liquidity cost. It's to be sure that investors will not be blocked in their investment for 5, 7, 10 years. They have a possibility to exit, to manage their portfolio, to enter at a later stage in this closed-end fund, for example, thanks to blockchain. And because it's blockchain based, it's still manageable for the issuer or its agents. You can have way more investors than before, and they can subscribe, they can sell their positions, they can trade with other investors automatically, but in full compliance. So we've seen that many issuers don't want to be publicly listed. In Europe, it's you have a lot of constraints when you are publicly listed. It's costly. You have a lot of reporting obligations, etc. But they want to be sure that their investors can somehow find a counterparty and trade when they need to do it.
Yeah. Well, we got about 5 minutes left. But in terms of the liquidity issue and the nature of secondary markets, do you think the STO market, the product, is replicating existing assets with a cryptographic wrapper, as we may call it, is enough to generate investor interest? Or do you think there have to be new permutations of what assets are to really make the market move?
I think accessibility is a big problem. If you look at the traditional markets and SME growth markets, quite often you have limited access to brokers and different layers of fees. Whereas I think what the crypto market showed us is if you provide a platform that everyone can have direct access to, you can actually develop liquidity in some fairly small companies. So I think improving accessibility, getting as many people direct to the marketplace as possible, can improve liquidity in assets that perhaps weren't so accessible before.
So you mean a wallet really can be a big player in that?
But yeah, potentially for the appropriate assets. I think rather than paying layers of liquidity fees, someone being able to go directly to market and express their investment views is pretty powerful.
Guys, in terms of Jim, you had to say something?
Yeah, I mean, there's been a trend, and a few people have touched on it, in other sessions today, of companies staying private for longer, and Luke just touched on it as well. That the reason companies are staying private longer is because A, there's the capital there in the private markets, but B, the major markets and the mainstream public markets aren't really set up for small early stage businesses to list. The costs are high, and there's an awful lot of touch points. They have to deal with a huge amount of different entities to get this thing to work, and the regulatory burden is high. So actually what Merge set out to do when we started 8 years ago was try and build a regulatory framework and a listing framework that was appropriate for these kinds of issuers. Because I think it's vitally important actually that some of these, hugely successful companies, more of the upside is captured in the public markets. If all of the upside is captured in the, in very few hands in the private markets, we're not really doing our pensions any particular good, and we're not really doing the retail public at large who want access to these early stage opportunities much justice either. And I think this technology, what Luke mentioned, they're sort of Tokeny and others are sort of bridging the gap between a pretty archaic system for transacting in private securities. They're trying to bridge the gap between that and the public markets by using this technology and the compliance logic that's baked into it. We don't tend to talk about. Sorry.
Well, we got about 3 minutes left. In terms of wrapping up, if you can address personally in terms of the future, the question was, what's next for the private market in terms of growth and the whole security token explosion possibility and so forth. But rather than making it a generic closing, if you can just share what you're doing in terms of where your company is going with respect to addressing the future and getting greater participation. Maybe we can start with Luke to close. Well, Ziv, actually, Ziv had the last moment at the beginning. So maybe we can have Ziv talk about the future and Symetria and where you're going.
Yeah, Symetria is focused on a very specific segment of secondary markets, which is the private markets. What we are trying to do is provide liquidity to liquid assets. And this is very, very complicated task because providing liquidity to different assets could mean different things. Some assets want to be very discreet when they're dealing with the liquidity of their cap table. Some assets wouldn't mind to be more like traded and listed companies. So you have to have like a spectrum of solutions that you can offer and products that you can offer. And today we demoed one of those solutions, which is the discrete mode, where two parties can communicate between themselves and decide upon the price, and everything is recorded into the blockchain and so on. So, going into the future, we'll develop this, this product and launch it. And we are looking to the future to become a regulated exchange out of Israel and to compete in the global market of exchanges.
Wishing you the greatest of success, Ziv. And Graham, what's your take in the future and with your company?
So I think over the next 5 years, every security pretty much moves to digital, and we're trying to position ourselves to be in front of that. So focusing primarily on SMEs and much like Jim, really trying to improve that access to capital markets, allow any company around the world to access capital from around the world, using the technology wherever we can to make it as efficient as possible.
Beautiful. And Luke, from Luxembourg?
Yes, I think that major financial institutions are coming into our space. They are all buying custody solutions for the moment to try to handle the Bitcoin bull run. And the next step is security tokens. You have a small in-between with NFTs. And why NFTs are booming is because you have credible people, Elon Musk and others, who are pushing this technology. I think it will be the same for security tokens. In a few months, in a few years, we don't know. But when major financial institutions will officially tokenize securities, it will move the space. The technology is there. On our side, we can provide the full set of technology, and we can help any financial institutions with investors or with issuers to launch a digital asset marketplace where they can list offerings for the primary market, where they can digitally onboard investors, qualify them, help them to subscribe their offering, manage everything digitally during the life cycle of the securities, and even provide a secondary market with a built-in board approach. So you don't need any, in Europe, you don't need to be regulated. You don't need an MTF license to operate a built-in board. So all of these issuers can today do that, provide that type of digital services to their clients. So what we just need is people big enough, companies big enough to say we are going, and the other ones will follow, I guess.
Well, my clock wasn't working as clearly. We have some more time. Graham, you seem to have talked a lot about access. Are you talking more about the issue of access for individual investors or more institutional investors? Can you expand a little bit about the access opportunity in terms of growing the industry through better access?
Sure. Yeah, I actually meant it from both sides as well, the issuer and the investor. And Jim talked earlier about the layers that prevent companies coming to secondary markets or even primary markets. So you've got companies that may be highly performant companies that either through cost or through knowledge just can't access capital, especially not global capital. So creating a platform that has been done in other technologies where companies can go and raise capital is the first part of it, but allowing that to more easily transition to the secondary market as well. And then on the investor side, rather than people having to go through their local broker and pay extra layers of fees, being able to go to any secondary market and register to participant, I think increasingly it's clear that retail are going to play a bigger part of capital markets in the future. People are more sophisticated, they understand technology, they understand trading, and I expect it to be more private individuals than corporates and institutions in the future.
Ziv, you must be excited about that, because I've heard you a couple of times spoke around the issue of the social charter that blockchain and innovation should bring to people. Yes. So in terms of all the changes that we're anticipating, is that still a very critical part of you in terms of having mass adoption of the use of the technology, but you want to see more democratization of earnings and wealth creation? Yeah.
Yeah, that's that's for sure. This is what part of the value that this technology brings, and what we are all about. And actually, when you see the regulators, and for example, in our case, we got a lot of support from the local regulators and push to launch our platform. This is because they see us as a way to finance SMEs. And those projects which are getting harder and harder to finance, they see the potential in us to bring this, this capital down to those SMEs and SMBs that need this capital. So it is definitely part of the value that we bring.
Mm-hmm. Look, the last piece of data I saw in terms of exchanges, DLT exchanges, was about 300. That's a lot of exchanges. I mean, regulated exchanges, we know you go to Israel, there's one main exchange. Well, Symmetria would be a second. You go to London, you have London School of LSE, and I guess your new exchange, Graham. In your country, I guess, Luxembourg. Do you have a public exchange in Luxembourg? I know Switzerland has one. You have a public exchange,
Just a short comment from the organizers that we need to wrap up this this panel.
Yes, it's actually, yeah. So my clock is just showing that we had a little more time. But so in terms of summary, I think you guys have shared some brilliant insights in terms of where the industry is at. We've defined the sector, and we've shared insights as to where it's going for the future. And I think hopefully the audience have gained some insights about your companies. They can, of course, contact you through the platform site. And we want to give thanks to Draper, Goren, and Holm for the opportunity of sharing with the public the whole idea around secondary markets and this big opportunity for the future of scaling and growing security tokens. Gentlemen, thanks for the opportunity.
You've been great.
Thank you very much.
Success, everyone.